What is flood insurance and why is it important to know about in the Savannah area? Hey, listen, I know this next video is super long, but Jeff Brady from Roundtree Brady is giving out vital information that you need to know about flood insurance in the Savannah area. If you're looking to buy, sell, or you already live here, watch this video. I'm going to chop it up into chapters and hopefully make it easy for you so you can come back and watch all the stuff later. But you gotta watch this video because it is crucial to know this information.
Hey guys, Patrick Donovan, be Realty, part of the Johnson Group here in beautiful Savannah, Georgia. I'm here with Jeff Brady from Roundtree Brady with Allstate, and he's going to be here talking about flood zones and flood insurance and everything you need to know about flood in the area. So Jeff, why don't you tell us a little bit about yourself before we get started?
Sure. So yeah, Jeff Brady, Roundtree Brady Insurance. Been in the industry for about 20 years now. And I'm a career insurance kid, if you want to say that. My father actually started in the industry in 1969.
Oh, wow.
So I guess I was kind of destined for it at some point.
Nice.
But as part of that, though, I also serve in some capacities for some of the communities here locally. CRS Flood Insurance Advocate, which basically means that for communities like Chatham County, City of Savannah, Garden City, anybody who wants to claim me, not only do they get points towards discounts on their flood insurance, but I'm kind of that technical I don't know if you want to call it expert, or if anything, it just allows me to better serve the community by helping people with understanding flood insurance, the flood insurance rates, and all that goes with that.
That's awesome. You know what? Insurance can be really tricky and to understand. That's why we brought Jeff in. He may not classify him as an expert, but everybody you talk to about flood insurance, they point to Jeff. So he knows what he's talking about. So let's just get into the questions, all right? All right, first question is, are there any factors unique to Savannah, Georgia that might affect flood insurance rates or coverage?
Sure. Well, I think the big key to know is that if you're buying in the area, we are known as the low country, right? So we got a lot of marsh, we've got a lot of waterways, Savannah River, Ogeechee River, not only the potential for coastal surge with storms,
right.
So all of that is going to influence, obviously whether or not you're required to carry flood insurance, but also what you end up paying in the end.
How does FEMA classify the properties in terms of flood risk zones?
Sure. So every 6, 7, 8 years, as FEMA's collecting data, they go through a process of remapping. And it could be based on development. Okay. So you get a lot of new construction, a lot of ground moved around that can influence the way water moves. Okay. But also new data in all of the studies and the models that they do. So they create these flood maps, and the maps can be revised periodically. So within those maps, you're going to have various zones. Typically in our area, you're going to have your A zones or AE zones, very similar, your V or VE zones, or your X zones. Now, VE zones, I jokingly call them very expensive because these are your velocity zones. These are going to be really, really coastal, like facing the beach.
Like on Tybee Island.
Tybee, there are some places in Richmond Hill, but you've got to be really close to an area where you're going to be looking at wave action coming at you.
Right.
So you got that. Now your AE zones are going to be more prevalent. And let me just say, if you're in an AE or a VE zone, you're going to be required to carry flood insurance. So if you've got a mortgage, you're going to have it. Now in the X zones, these are your lower risk zones. You're not required to carry flood insurance. However, give you some statistics.
Okay.
1 in 3 flood claims locally is in an X zone.
Okay.
So a third. 1 in 4 nationally. So if that tells you anything about potentially, the risk there, it's not saying you're going to flood. It just simply means that there is a different risk associated with that. And so when we think about the maps themselves, that's kind of a guide to it, right. But it doesn't mean that just because you're in an X zone doesn't mean you don't have risk. Right, and I think that's still something to consider when it's all said and done.
So speaking on that, just out of curiosity, and it just came to my brain. So say I'm in an X zone or X500, whatever, and I do get flooded, but I don't have flood insurance. What happens with insurance wise?
Well, if that's the case, you're going to probably try to file for some sort of assistance through FEMA. And best case scenario in that is that you're going to get some sort of a, SBA type loan to cover it. The FEMA's not going to just come in and say, sorry, here's a bunch of money. That's why they have flood insurance.
Are you talking about small business?
Yes, SBA. Yes, the Small Business Assistance Corporation through the federal government actually can provide. That's the arm at which they provide these low interest loans to homeowners.
Oh, so it's a loan, so they're not going to give you money because you're insured. There's hey, get with the SBA. They'll give you a loan that you'll have to pay back.
If you're not insured. So if you have insurance, you obviously are going to have your coverage.
Right.
But if you don't have insurance and you get flooded out, you're either on the hook for it personally, or the other option is you can file for assistance through FEMA, and then they will direct you to SBA for that.
Oh, wow. Okay, so let me ask you this. So talk about flooding, right? And I hear this a lot. So say there's wind blows the roof off and then I leak through the roof. Right, I'm not in a flood zone, and all the rain is just coming through and flooding through the house. Do you guys cover that?
So flood, let's define floods, because I hear all this. I hear this all the time from clients.
There we go. Yeah.
So flood is groundwater. All right. So this is going to be storm surge. This is going to be, streets back up and it comes into your house. Right.
Mm-hmm.
So I hear it all the time. People say, they call me up at the office and say, Jeff, I've got a flood, and I look outside and going, it's a beautifully sunny day. What's going on? They have a pipe burst. Or heaven forbid, they have a storm and they've got damage and water's coming from the roof down.
Right.
That's homeowners insurance.
Okay.
Yeah. Flooding is going to be surge. Your rivers come out of it. That's what flood insurance is going to cover.
That's what it's for. So it's for the groundwater coming in, not from your roof. All right, fantastic. Great. Okay, so how does a consumer, if they wanted to figure out the likelihood of flooding in a specific area, how would the consumer find that out?
Well, there's not necessarily some big database that you can go to. I know that when we look at a specific property,
right,
if we run a flood quote on it, it's actually going to give us some historical data on whether or not a claim has been filed.
Okay.
But then also, if you're in the city of Savannah or unincorporated Chatham County, they actually work together to put out a newsletter each year. And on that, there is a map which you can actually get from the city of Savannah's website or unincorporated Chatham Counties. Now, I got to say that each community, and we say community, Port Wentworth's a community, Pooler's a community, Garden City's a community. Not everybody has all that information readily available. You can check with their floodplain managers to see if there's some data out there. But the city and the county, and yes, if you're sitting here in Savannah, you're in Chatham County,
right,
but you're technically going to fall under city of Savannah. So you got to know where to go to look for that. But the county and the city have maps that you can see. And you can look for, these are flooded structures, they are filed claims. So if somebody hasn't filed a claim, hopefully it's on a disclosure maybe or something
right.
There's been a flood to it.
So you're saying, if we're writing a contract, what he's saying is the seller's property disclosure requires you as a seller to disclose anything that's happened to the property. So if the property has flooded and they don't put it on the seller's property disclosure and they didn't file a claim, then there's no historical data for that, obviously.
Yeah.
Because they didn't claim it. Now, if you're in a situation where the home was flooded and they didn't disclose it in the seller's property disclosure, then you have recourse against the seller if you buy the house. Okay, cool.
And I will say this too. And one interesting thing at Georgia Tech is actually working with Chatham County and the city of Savannah and doing some stuff. They actually have, you can go to the sea level sensors, and I can get you the website for it.
Okay.
But it's actually something that Georgia Tech had started to pull together. And to be quite honest with you, I'm really excited about the fact that I actually was able to make the connection. The gentleman who started this was a speaker at a Rotary group that I'm a member of.
Okay.
And got him involved with SEMA, which is Chatham Emergency Management Agency.
Yeah.
And they have now since deployed 68 different sensors in our general area, so they can actually see how things have worked. So you can actually go to that website and actually download data based on various events that we've had. So if you want to see what's out there and how things have impacted, these are typically, they could be someone's private dock, they could be bridges.
Wow.
So it's actually a really, really neat thing.
How far back did they start that?
This has been, I want to say 5 or 6, 7 years ago, maybe.
Oh, okay, perfect time.
So maybe 8 years, something along those lines. But they've got some good data, and they're continuing to deploy that network, which I think is great. So we can really see
drill down. Yeah.
Well, you can see how a flood really impacts our area.
Right.
So it's a lot of great public, and it's public information, so you have access to that. You can go out and look at that if you want to get really nerdy about it.
But if you're confused or you have any questions about if you're going to go buy a home, so like for instance, as a real estate agent, I have access to Sage's. I also have access to, well, actually, Sage is a public website, so everybody has access to it. But also our real estate portal, it kind of combines the Sages. So when I'm looking up a property, you're telling me whether or not it's in a flood zone or not, according to FEMA. And then from that point, we can get the ball rolling and talk to Jeff. Hey, it's in a AE flood zone. Can you verify? Maybe like we were talking about earlier, can you talk about when they start developing maybe a new development, how the builders mitigate the flood risk?
Sure, yeah. So obviously we're low country. And so in some of these areas, as the area is growing, some of the properties that they're developing are lower. Right. So what will happen is a developer has the ability to go in and through some engineering studies, they can actually build the ground level up.
Okay.
So what they're doing, they're bringing in dirt, so they're going to mitigate that by bringing the ground level up. They then go through a process called a LOMA. It's a letter of map amendment, and you can actually do this on any individual property. So if you're, it's not going to change what you pay in flood insurance at this point. Okay. However, if it's a difference between, hey, I want to carry flood insurance or I don't, a LOMA just basically shows that your ground level is high enough that the house itself, and this is the key, the structure itself is what's going to dictate what flood insurance, what zone you're in. So if the house doesn't touch the flood zone, but the back of the property does, you're not going to be required to carry flood insurance at that point.
And you're talking about on government loans, right?
Yeah. Correct. Yeah. So if it's a federally backed loan, if you're in those AE or VE special flood hazard areas, you would have to carry flood insurance.
Right.
But if it's cash buyer, it doesn't matter. Right. If you own it outright, it's totally up to you.
And Jeff was telling me earlier that flood insurance, if you're in a government-backed loan, FHA, VA, USDA, you would have to have the flood insurance escrowed into your payment. So, for instance, when you're paying your monthly mortgage payment, you're not only paying principal and interest, but the lender also collects the insurance and the taxes for you, and at the end of the year when it all comes due, they just take that savings account and they send it to where it's got to go.
Right.
So it would have to be escrowed into your loan so that the flood insurance is definitely taken care of, because it's mitigating risk for the lender who's giving you all this money for the home. So right.
Exactly. And the other thing too to notice on that is that when you're required to carry flood insurance for a loan, your coverage is immediate. So the day you sign those papers and everybody's happy and you get the keys, you're covered. Boom. Right. And that's only if you're required. Now, if you're not required, there is a 30-day waiting period. So if I make a payment today, my coverage doesn't start for 30 days. All right, so that's one thing that I always tell people. You want to make sure that you're being proactive about this. If you want it, don't go calling your agent or your insurance company on August 15th and there's a storm swirling in the Atlantic. Right. You're not going to be covered at that point.
That is huge. I can't remember what flood what it was. I think it was like 3 or 4 years ago. Or there was a hurricane sitting off the coast, and it was projected to hit, and then people were trying to close their loans, and they're like, I don't know if I should be closing it because... or trying to get flood insurance, and it didn't affect them because that storm was going to hit way before it kicked into place. So that was a lot of scary times during that time when you're trying to close homes. But yeah, so if it's required, like Jeff says, it's automatic at the end. When you close the loan, boom, you're covered. If you are not required, so if it's in let me ask this question actually, now that I think about it. Okay, so say we're under contract, we're buying the home. It's an X-flood zone, not required. And they're all cash or whatever. We'll just try to say it's not a government loan. What if they wanted to put it on flood insurance from that point? Does it still wait till 30 days after you apply?
There's 30, regardless? 30 days, doesn't matter. So now I will say this. One thing that you can find out, and this is kind of early in that process, is if... Let's say you're in an X zone, you want flood insurance, but you're concerned about the time of year, or you're a cash buyer and same type situation.
Right.
First thing you do is find out if the seller has flood insurance.
Okay.
So if the seller has flood insurance and you can get it in the contract, that's your cup of tea right there. But you get it in the contract, you can actually do what's called a policy assignment.
Okay.
So that means that you're effectively, like, let's say I'm buying your house.
Right.
And you say, Jeff, I'm going to give you my flood insurance. Now, they're going to sign it over to me. I'm going to take over that policy immediately.
Okay.
So, but it's same coverage, same policy number, same pricing, everything associated with it. The key, though, is that if the seller wants to be reimbursed, it needs to be on that closing statement.
Okay.
So you just put it in like taxes and that sort of thing, because no money changes hands with us. But that's a way to get around that 30 days, especially if it's hurricane season and you're concerned about
That's
that.
smart. So let me ask you this, because a lot of people get flood insurance really only becomes important when you're buying a home, or if we got a hurricane or something coming off the coast. Say, for instance, they bought their home and they want to add flood insurance on after that. That's totally cool. Right?
Absolutely.
After the season's over with, it's fine.
We can add it. We write a lot of flood insurance during hurricane season. Even if there's a storm out there, they know they're not going to be covered. But heaven forbid if it's August or September and we're still in the heat of hurricane season.
Right.
Fingers crossed nothing happens for that particular event, but they know that they're starting the clock. And that 30 days, so if something does come up later in the season, they are going to be protected.
So if that hurricane passes by, but the next one's swirling off the coast and does hit us, then they're covered.
Right.
Excellent. All right, great. Are there any historical records or data? I know we had talked about the Georgia Tech thing, and is that kind of where you would get your historical data of properties, or each individual property is like their own thing, right?
Yeah, so I mean, it's hard to say, because you could have two properties in an area and they could be, you look at the ground topography, for example. We have homes that aren't terribly far apart,
right?
But one could be on a bluff, one could be low. Well, that one on the bluff could be much less of a risk associated with it. And somebody down the street could have had flooding. Somebody may not have filed a claim or gone through that.
Right.
There is some stuff out there, but a lot of it is just really more of understanding that, your risk is going to be driven based on your ground level.
Right.
If you're buying a house that the ground is low, it's just the reality of where we are.
Exactly.
Understanding the risk and understanding how that pricing works, because if you're low, it's probably going to be more expensive. Even if you're built up, you're going to get some relief. But the fact is, you're still going to be, impacted based on that ground level.
Right. Okay. So, like when you start getting the home process, you start getting really serious during that due diligence period. It depends on what your real estate agent and you come up with as far as negotiating due diligence time period. But that's the time that you need to talk to your insurance agent to get all this stuff rolling. The thing is as a real estate agent, I may look at the flood zone. It might not be in a flood zone. I'll tell you it's good to go. But you want to get with your insurance agent early. He's going to be able to find out way more information about insurance-wise on these homes, because that's, his job. You know what I'm saying? Yeah. So get with the insurance agent early, and then they can work out any kinks. You may find out, bam, it's in a flood zone. Maybe the remapping or whatever is not historically or is not correct on our website, and Jeff can definitely help you out. So get with the insurance agent early through the process. Okay. So we said that the ground level is the requirement to get flood insurance. Is that correct?
Yeah. So FEMA and the maps, they based on, and the last iteration of maps that was done, they took
Is that 2018?
2018 was the biggest one for our area. So with that, it took them 8 years to actually build all the data out.
Wow.
It was pretty amazing to be a somewhat part of the process, at least on the periphery. But what they did is they took 5 historical storms.
Okay.
They took the data that was from those storms.
Okay.
And they built a program that basically was going to allowed them to generate a number of hypothetical storms. So once the program itself actually duplicated the observed data, they pumped hundreds of hypothetical storms through this thing.
So that was like building the algorithm using these 5 historical storms and then using current data to
just kind of push it all together. And what they're able to do is with that, they got to see a lot more of the drainages and things, so they could see how water would flow in all of these areas. I won't bore you to death with the details on that, but suffice it to say, it just made the maps much more accurate. Now, does that mean that it's if you're in a flood zone, you're not going to flood, or you are going to flood?
Right.
They're doing their best educated guess on that. So, but they will set what's called a base flood elevation. All right. Okay. So if the base flood elevation is 13 feet and your ground level is below that, you're going to be required. You're going to be in that AE zone, for example.
Right.
Now, if you're at 13.1. That's where I was saying you could show that even if the map didn't cut the line close enough, you could actually do that letter of map amendment.
Right.
But is your risk really that much lower?
Yeah.
Right.
Yeah. It's just saving, you're just not paying flood insurance anymore.
It's a choice.
That's the choice. You're taking the risk, rolling the dice. Our area, I wouldn't say we get slammed with hurricanes all the time, but I mean, it's become more of a threat recently. I mean, I've been here since 2002, and more recently it's been more active, I would say.
It's definitely, and it goes through cycles.
Yeah.
I mean, we had a couple of years there with Matthew, and then obviously the impacts of Irma, but Irma was we actually saw more flooding from Irma than we did from Matthew, and Matthew was 25 miles off our coast.
Right.
It was all storm direction and everything from that, which was pretty crazy to see.
It was crazy. It's been crazy to live around here and to see that kind of change, like you said about cycles and all that stuff. Okay. All right. So, we start working on the insurance process. I got my clients under contract. Okay. Do you provide them with an estimate at that time based on the property?
Yeah. So the first thing that's going to happen is this. So if somebody comes to me and say, hey, Jeff, I'm looking at a particular property, and this is any agent out there.
Right.
We're going to, from a flood insurance standpoint, we're going to check the zone. We're going to run a flood zone determination.
Okay.
The new risk rating 2.0 system is going to map it, so latitude and longitude. It's going to look at a 500-meter radius in every direction to see what the ground topography is around you. Okay. So are you in a bowl or are you on a hill?
Oh, wow.
It's going to check losses, so have there been previous losses? And so all this new system is pulling from this rating engine, pulls it in, we answer a few simple questions, and in a couple of minutes I can tell you exactly what the cost is under risk rating 2.0. Now, the key though is that risk rating 2.0 came out in 2021. All right, so we're just a little over 2 years into this. A lot of properties are going through a stepping stone change, if you will. So if they're going to go up under this new rating platform, they're limited on how much they can go up each year. So if a buyer goes out and just gets a flood insurance quote, that's the full risk rate. But a seller may actually have a lower cost premium, even with the same coverage. So from a buyer's standpoint, if they can get a copy of that declarations page, I can actually duplicate that policy for them. But the key is this. We're going to see what's called an annual increase cap discount. All right? That discount is going to go away over time. So as you're looking at this, that's to know. So we want to project. So let's say you're working with one of our members of our glorious military that come into Savannah. With obviously we got Fort Stewart, Hunter, MCAS Buford, Air Station Tybee. Who knows how long they're going to be here? 3-4 years maybe? What do we want to think about? We want to make sure that we know what they're up against in 4 years. Is that an issue for not only cost, but also is it going to pose a problem for maybe marketing that property themselves?
Yeah,
exactly. Right. So that's just part of that due diligence process. We can get a copy of the declarations page, see where they are, see where they're going, and make sure it's a right fit.
And it's like I always say, and it's not just a lot of times. Buyers are apprehensive to tell us everything that's going on. I would tell you, when you're talking to your insurance agent, let them know what your goals are, what your plans are. When you're talking to the mortgage lender, same thing. When you're talking to me, give us what you need because we're going to tailor our advice revolving around you and your situation. The more information we have, the better we can help. So it's kind of like the insurance. If they never claim flood on a house, right, you don't know, right, if it's going to flood, right? But it's the same thing. If you don't tell us everything that you need to accomplish your goals and dreams, we can only tell our advice to what you say. So please be forthright in coming with, the insurance company, mortgage company, and obviously myself. So what steps should you take to ensure adequate protection against flood-related damage for their home after they purchase?
Well, the first thing is obviously if you're required to carry flood insurance, then you're going to have coverage. Second thing is understanding your coverage. All right, so the NFIP policy, NFIP is a National Flood Insurance Program. Okay. That's through FEMA. It's about 90% of the flood insurance that's out there. Okay. So I'll touch on private insurance here in a second. But the National Flood Insurance Program policy provides up to $250,000 in building coverage and $100,000 in content coverage. Right? That's max coverage. There is no loss of use. There is no spoilage coverage associated with that. It is purely contents and building. All right. So you're talking about adequate coverage. There's a few different ways you can address that. First off, you may be perfectly comfortable with that. You say, I got a 2-story house, it's 1,000 square feet down and up.
Right.
If it floods here, I'm going to be sailing away on the ark, right? So it's, but they may say, well, I'm okay with just carrying that. But let's say you've got a really nice home. You think
$500,000,
$600,000 structure, maybe on one level, right? So you've got that. Is $250 really going to be enough if it's a real major flood loss? So there's 2 ways you can address that. One, there are private markets out there where you can get excess flood coverage. So buying coverage over and above the $250, it sits on top of that.
So it mirrors the same coverage below. It's just at a higher rate.
What it does is that FEMA covers the $250. So let's say I've got a $500,000 home and I want to insure it for $500,000 for flood insurance.
Right.
I buy $250 from FEMA, and then I'm going to buy this excess policy that sits on top of that. So I'm going to buy another $250 from them. So let's say I have a $400,000 loss. I'm going to get $250 from FEMA. I'm going to get $150 from my excess coverage. So that's one way to do it. Okay. The other way is there are private market options out there. Now, the private market options, you can get them as primary coverage, meaning you don't have to buy the FEMA policy. You buy the private market option.
Oh, okay.
Sometimes this can be better priced, but more importantly is generally you can get better coverage, meaning you can get the loss of use. So heaven forbid you get 2 feet of water in your home.
Right.
If it's only flood loss, your home policy is not coming into play.
Right.
Then that additional living expense coverage under your home policy is not kicking in.
Wow.
So the private markets, many of them will not only give you spoilage coverage, they'll give you that loss.
When you say spoilage, you're talking about food and stuff like that?
So people, we see this often, and got to be careful about it, but you see it often when people filing claims for that, but that's just a level of coverage that you can get.
Okay.
FEMA doesn't have it. Loss of use, meaning I can't live in my home because of a flood loss. Private options do have that. You can also get higher limits. So, for example, I quoted a property, $1.2 million. All right, now granted, each property is its own unique piece. We talked about that. $1.2 million on the structure for flood.
Right.
The content coverage was $250,000.
Okay.
We got them $100,000 in loss of use coverage.
Okay.
Now the premium was about $2,100 for the year.
Okay, here's stop you real quick. What is loss of use? When you say that, what are you talking about?
Loss of use is this. So whether you have a fire, you have a busted pipe in your home, you have to move out for 3 months, 6 months.
That's what I thought it was.
Yeah, so it's expense that I got to go live in a hotel. I got to go to a STVR for a period of time because I've got contractors running through my home.
Right.
That's that. You still got to make that mortgage payment. Right.
Right.
The mortgage company is still going to require that. So do you want to have that additional cost of having to pay to live somewhere else? That's where that additional living expense, we call it ALE, that comes into play. But if it's just a flood loss and home insurance isn't coming into play, that NFIP policy isn't going to provide that coverage. So that's where that private option can come in. So it doesn't hurt to even price that out. And luckily, FHA has just started accepting private as well.
I was about to ask that question. So, all right, is it just So
they all can do it. FHA was the holdout.
Oh, okay. So if you have a government loan, you don't have to get the FEMA policy. You can get a private policy that could be better.
Absolutely. And the other thing, too, which is nice, is even in an X-zone, most of them have a shorter waiting period. So like we have a market that's 7 days, if not required, and another one that's 15. So that's a nice option, especially. But the pricing can be all over the place. So sometimes FEMA is still the better option, even if it is reduced coverage.
Once again, talk to Jeff. He can give you better options. Once again, knowing what you need to have, that's how he can tailor his advice best. And so, so if I had a $500,000 home, you get the private option. You say it could be cheaper. Is it shopped out? Do you guys like broker that or? Yeah,
so it is going to be. It's not through FEMA, obviously. So it's going to be underwritten by another company. It's going to be A-rated. They know what their appetite is for the area, and you can kind of tell that in pricing. Sometimes they don't really want something in an area, and it'll be really expensive. And other times we found that it's well worth going that route.
Okay, and you brokered that deal? Mm-hmm. Oh, yeah. Excellent.
Yeah, we actually have 4 different flood options that we can go to.
Sweet. Okay, great. So you're not stuck with just one option. You can have any kind of options, like I said. Be forthright. Okay. All right. So let me ask you this: how does flood insurance work with homeowners insurance to totally cover the clients?
Yeah. So keep in mind that insurance is there for sudden and accidental loss, right? It is not a maintenance policy. Okay. So you think about my roof gets old, and it's just time to put on a new roof sometimes, and that's a tough pill to swallow.
Yeah.
So you got to be prepared for that. But when we think about hurricanes, so clients will come to me all the time and say, Jeff, I need coverage for a hurricane. I say, well, a hurricane has multiple types of loss.
Right.
Wind, lightning, could be, water, could be flood. I mean, all these things. So depending on where the damage originates from. So if it's surface water, so heaven forbid, we get a surge, you get 2 feet of water in your house. And if you ever remember the pictures from some of these storms, you'll see that scum line. After the water's gone away, the scum line that's there. Well, basically, that water line down, that's flood insurance.
Okay.
So let's say, heaven forbid, your roof gets ripped off, or you've got damage, tree comes through it, water comes in, but no flood. Right? It's water's in there, but it's only because you got a hole in your roof.
Right.
That's all home insurance.
Okay.
Right? Now, you get that, plus you get 2 feet of water from a surge. Now we've got 2 different policies at play. And the big key to note is that know what your deductibles are. Know what your out-of-pocket expenses, because you get both. You got potentially a wind or a hurricane deductible, and then you've also got a flood deductible. So you as you're choosing deductibles, depending on what's optional or what your options are, you got to know you could have $8,000 or $10,000 out of pocket potentially.
So what's typical? Like, if we're talking about what's the typical deductible for flooding and homeowners insurance?
So flood, with FEMA, you can get as low as, with FEMA, you actually have 2 deductibles.
Okay.
You got a deductible for the building, you have a deductible for contents. So if you're trying to cut costs and you choose $5,000 and $5,000, that's $10,000 right there just on flood alone.
Whew.
Okay. But you can go as low as $1,250.
Okay.
So $1,250 and $1,250, about $2,500 out of pocket. And to be quite honest,
obviously a higher rate, right?
Yeah, but to be honest with you, under 2.0, the rate difference based on deductible is not nearly what it used to be.
Oh, good.
So once you start looking at the dollars and cents, maybe you don't get that extra Starbucks this week, and or maybe you still do. I don't know, but you just look at what the cost is with it. The big one to note, though, is when you're talking about home insurance, right?
Okay.
So you got home insurance. If you're buying in a coastal area in the southeast, insurers are definitely reevaluating things, considering reinsurance costs, frequency and severity of events.
Well, it's just funny you say that, and I don't have to cut you off, but it's like USAA. I remember I was living in Savannah, had the house, and they're like, we can't cover you because of the hurricane risk, right? So that's crazy. So I'm sorry. Go ahead.
No. Well, and companies go through cycles. Right. They're always going through cycles of things, and it really depends on their underlying cost.
Right.
How much risk do they have a certain area?
Okay.
So one thing I will tell you is...
Oh, that makes a lot of sense.
Yeah,
okay.
So you've got a lot of people in one area that it can be, they don't want to keep adding to that particular zip code or that density.
Yeah, that makes sense, because if you had a hurricane come right through here, they're on the hook for all of that.
For every bit of it. So
right.
I will tell you this, when you're going through the process and getting quotes for homeowners insurance, the biggest key is to understand what your out-of-pocket expense is. All right. So we live in the land of percentage-based deductibles. All right. So depending on the insurer, it could be a wind and hail deductible, right? And you'll see anywhere from 2 to 3 to 5. I've seen as high as 10%. Now, the key is this. It is not a percentage of the loss. It is a percentage of your coverage. So if you've got a $500,000 house and you have a 5% wind deductible, that is a $25,000 wind and hail deductible.
Whew.
That means any wind and hail loss. Now, depending on the company, it could be named storm. Now, named storm, it's not going to be Winter Storm Liz. These are going to be named by the National Hurricane Center, which defines it.
All right,
so tropical storm or hurricane. All right, that could be the triggering event. Or for some companies, it could be if we're placed under a hurricane watch or warning or a hurricane event limiting to, may not be tropical storms or tropical depressions. So you might pay a little bit more, but your deductible for those other scenarios is going to be much lower.
Okay, all right.
So that's just one key that we see often, is that people don't understand. It's buried on their declarations page somewhere, and they think they've got a great policy,
right,
and then they come to find out they've got a 5% hurricane deductible, and they don't realize that they're out of pocket $10, $20, $30, $40, $50,000
right,
in the event of a loss.
Man, it's huge.
So you got to be prepared for those things, because if you got a $25,000 deductible and you got $20,000 worth of damage, your insurance isn't paying anything.
Oh, Oh my God.
So
And then,
that's it.
and they're only paying up. So you do $25,000. They're only covering whatever the rest is. Is that?
Yeah. So if it's $100,000 loss, you pay 25, they pay 75.
Yeah.
In that scenario. Now, most of them, what we're seeing, if you want to talk about what's typical as far as best case scenario, most of it's going to be 2%. So you're looking at 2% deductible, depending on the carrier. It could be wind and hail, meaning all wind and hail losses, including tropical storms and hurricanes, or it could be just limited to hurricane. That's about as tight of a window that you could see, which that's the better policy, because those other wind and hail loss situations, your deductible is going to be much lower.
Whew. So it's a lot of stuff to think about, a lot of stuff to understand, and obviously, we don't work in this business of what he does, so you can explain all this to him, right? You do a breakdown for him?
We want to make sure you understand 100%.
Right, I figured as much.
I joke with people all the time. I'm paid to be paranoid. And the reality is that my job is to provide you with the best protection that I can provide, and make sure you understand exactly what your responsibility is and what options are available to you. So, I can show them to you. Ultimately, it's your decision on what coverages you select, but we want to make sure that we educate the client on that, because at the end of the day, whether they close on a house and something happens a month later, a year later, 10 years later,
right,
you've got to know what you're up against from a financial standpoint before the insurance starts to pay.
Absolutely. That is, So it's a lot of stuff. Like, you want to make sure you get with them early in the process, the due diligence period, so that you can know whether or not, is that $50 a month or $100 a month extra worth, maybe I only come out of pocket $5,000 if we have wind or hail or whatever. So definitely get with Jeff early in the process, understand all those things, not only so you can have that money saved in the background just in case, but just so you know what's going on during your insurance process. So, Jeff, I really appreciate you coming and talking about this stuff. Man, this is very educational. And what I have learned today is I learned a lot about flood and stuff, but I learned I need to call Jeff if I have any questions about these things, because he's very knowledgeable about it. And once again, if you guys got any value from this video, do me a favor, like, share, subscribe, and I really appreciate you guys watching. I'll talk to you guys soon.